welcome to the module on the balance sheet of central bank. First of all, in the introductory part of these discussions, we are going to discuss about the concept of the central bank and what are the functions it performs for the development of a nation. So in terms of the central bank, it is said that for the developmental perspective of the entire economy or the nation, central bank plays a supervisory role and also act as a regulator in the provision of the credit creation from the beginning as they did subsequently. Secondly, the central bank are basically the transmigrated from the mere issuers of national currency to wardens of its value. That means the concept of exchange valuation, the value creation, and the forex management all are considered as one of the most important components of the central bank mechanism. Moreover, in terms of the central bank, also we want to explain how the linkage with the economic system can be developed. This linkage can be more holistic and take care of the demand and supply apparatus. Moreover, we can see that the concept of the balance sheet in the banking is more important than the ordinary concept of balance sheet in accounting standards. So here we want to mean that balance sheet of a monetary authority is unique because it's derived not only as a source of money creation. As we understand that the central bank actually goes for the creation of monetary base, which is called high-powered money, which comprises of currency and reserves, and along with the participation of the commercial banks, interaction with the public, they go for credit creation or money creation. So this basically comes up as a relationships with the government on one hand and also the banking and financial system on the other. So this is basically taken up as one of the uniqueness in the balance sheet of the central banking. Moreover, we can see that the information content and the health of the central bank balance sheets, that is also very much important, because the health of the central bank balance sheets also explains importance regarding how the financial instruments perform and how they exist in this world. So this takes care of two important components. Firstly, the concept of the balance sheet, how the government and the financial instruments work hand in hand, and thereby the health of the central bank, that is also concerned in terms of the economic and financial prosperities or prospects. This boils down to the very first question, like definition of the balance sheet in the central banking. So by definition, we mean that the balance sheet is basically not separate from the others, but it is unique in certain respect because it contributes to the creation of the money and the wealth. Also, it wants to maintain a kind of relationships with the government and with the banking and financial system on the other. Now we move on to the concept of analysis of central bank balance sheet, because whenever the balance sheet is being prepared, the reading of the items mentioned in the balance sheet carries the utmost importance. So in terms of the analysis, we can see that this basically crops up from the three primary functions that a central bank performs. Firstly, issuer of currency. So whenever we consider the printing of the paper notes or the coins and thereby the currency management, that is being done by the central bank. Secondly, banker to the government, that is also called the lender of the last resort or the banker's bank in terms of any exigency or in terms of the credit availability or in terms of credit creation. And thirdly, banker to the banks. So that means in all the three manner, we can see that the process of credit creation is of utmost importance from a central bank perspective. So in terms of the currency management, in terms of the lenders of the last resort, and also in terms of the banking management. So given this continuation of this analysis, we can see that the central bank balance sheet is usually analyzed from the twin angles. Firstly, the ability to issue currency. This is very important because this comes up with the paper notes or the currency in exchange. And secondly, ability to achieve the monetary policy of price stability and growth, because these are the long-term objectives of a monetary policy of a nation, which looks after the price stability, that is looks after the inflation stability and also at the holistic growth. So that means all of a sudden we can see that the central bank balance sheet comprising of two items, one is currency issuer and at the same time moving for price stability and growth in this perspective. So in order to track the transmission channel of monetary policy, basically the monetary authorities should look after the asset and the liabilities and also how macroeconomic aggregates can be done. So basically we can see that whenever any kind of risk management will be conducted, any kind of asset liability balances will be done, then this monetary policy plays an important role in transmitting them through the monetary authorities, and thereby the functioning can be done. This boils down to the concept of classification of asset and liabilities by the sector of origin rather than the type of financial instrument. This is very much important in the understanding of the balance sheet of the central bank, that the nature of the financial instrument can be either mutual fund, can be debenture or share, but most importantly from where this kind of derivatives are getting originated. And that is how the monetary management can be done. So the first component that comes up in the monetary base or the high-powered money of the central bank is none other than reserve money. So this reserve money comprises of the currency and the bank balances, which will generate the money supply through the process of credit creation. This will take care of the credit multiplier or the money multiplier, and thereby 1 unit of money supply will be generated from 1 unit of high-powered money. So this has a multiplier effect in the process. Secondly, when we talk about excess bank reserves, this is basically the balances which banks maintain with central bank over and above the reserve requirements, which can be the measure of bank liquidity. So in case of India, whenever we talk about the broad money, then we say M3, that is what we say the liquid money. So this is basically the excess of reserves which are laid down by the central bank. So basically in case of the analysis of the central bank, we look for the creation of the reserve money, and at the same time we look for the bank reserves which they are maintaining in this regard in terms of settlement balances or in terms of reserve requirements. Now we move on to the component from analytical purposes. So for analytical purposes, excess reserves can be further decomposed into borrowed and non-borrowed reserves, because this depends upon the commercial bank's need and the commercial bank's ratio that they maintain, which comes under statutory liquidity ratio, where the commercial banks need to maintain a fraction of reserves with the central bank. So this is basically being conceptualized by Fed, which is the Federal Reserve of United States, in terms of the borrowed and the non-borrowed reserves or funds. Second component of excess reserves can be the autonomous factors, which will be dealing with independent factors which are taken up like the loan or like the aid, or discretionary factors which can take up by the central bank at different points of time. And over and above, we have the European Central Bank, which also looks after the monitoring of these reserves across the globe. So that means any kind of excess of reserves can also be autonomous, or it can be depending upon the central bank authority, which will take after the European Central Bank in this purpose. This basically boils down to the question, like discuss on the analysis of central bank balance sheet. So in this analysis, we are going to mention about the two important components on which the balance sheet depends. Firstly, the reserve money, which is basically currency and also takes care of the bank balances. And secondly, the excess bank reserves, which basically look after the autonomous or any kind of reserve requirements that are there. Apart from this, we are now moving on to the stylized patterns of the balance sheet, because these are some of the factors which are taken up of prime importance. The first one is on the asset side and the other one will be on the liability side, because the balance sheet will be considering as the credit and the debit columns or the components. So first we took on the asset and then we'll focus on the liability. So on the asset side, as we can see, the central banks like the Federal Reserve support the high-powered money. So this high-powered money is also called the monetary base of an economy, which comprises of currency and reserves, which are primarily by the government paper of such different maturities that the asset and liabilities are the close substitutes. That means it takes care of currency and reserves, which are the component of the high-powered money that comes on the asset side. And on the other extreme, we also have the pseudo currency. So today we talk about a pseudo currency because capital market has come up with a portfolio diversification model that is referred as diversified asset base, where not only paper money, we have the plastic money in terms of credit cards and debit cards, also you have the fiat money and also you have the demat accounts, particularly in the capital market. So all this comes also under the balance sheet of the central bank under the pseudo currency board. Pseudo means false. So which does not match with the monetary liabilities, but they are basically representing a diversified asset base. That comes one of the dynamic patterns of today's balance sheet of central bank. Apart from that, we are now concentrating on the liability side. That means the currency is usually the dominant component of monetary base in most of the cases following the cuts in the reserve requirements. Sometimes the reserve requirements are exhausted when the government is in debt, the central bank provides the moratorium to them, or any kind of exigency which comes as a liability from the central bank point of view. And secondly, in case of central bank always prefers government securities to their own securities for liquidity management. This is very important for the management of the liquidity so that markets fragmentation can be avoided, and they can also come up in the emerging markets to issue their own bills. This is also important in the case of the stylized patterns, because we can see that in case of liability, we are concerned about the non-performing asset of the commercial banks which can end up in the bad debts. So it is the central bank which acts as a regulatory factor to monitor this kind of issues in the balance sheet. So we come up with a question that identify and explain the stylized patterns of balance sheet of the central bank. So first we identify on the asset side, which takes care of the government asset and the liabilities, and then on the liability side we go for the currency, where some of the reserve requirements at times can be compromised for the betterment of the government or for the welfare of the nation. Now we move on to the concept of the balance sheet volume or the balance sheet size. So the dimensions of the balance sheet, or what would be the major components and how the asset can be further classified, what can be the total decomposition elements of liability, this depends on certain factors. So on what factors the size of the balance sheet depends? It depends on the degree of financial deepening of the economy, which determines the relative reliance on cash. This is also important that whenever we talk about the transactions, because the transactions can be of two types. One is for the transaction motive, that is engaging cash in the purchase and sale of goods and services, and another one in the speculative motive, that is investing money in bonds to get a rate of return. But when I talk about the financial deepening, it means that more and more bank accounts are basically being opened up in a country, which is a degree of financial inclusion. So more bank branches, more branches of the commercial bank, more bank accounts are there, so there will be more and more relative reliance on the cash or the idle money. So this also will make the balance sheet to be more exhaustive if greater financial inclusion or deepening takes place. Secondly, operating procedure of the monetary policy. Sometimes the monetary policy goes for open market operations. That means buying and selling of bonds. So if this type of operations becomes vast or it has a wider coverage, definitely the size of the balance sheet increases, and that makes the balance sheet to be more voluminous. Apart from this, we have some kind of issues which are like the daily issues or short-term problems, like requirement of settlement balances. Settlement balances in the sense when commercial banks run a debt or any kind of loan that is not being repaid or there is a defaulted issue, then the central bank intervenes. So in case of interbank transactions, depends on the parallel sophistication of payment and settlement systems. This also comes under the balance sheet because today most of the operations are done on the digital portals or the digital infrastructure in banking, which calls a banking innovation. So thereby the size of the balance sheet depends on these three factors. So we take up a question in this regard, that on what factors does the size of the balance sheet depend? So we can see the first factor is definitely financial deepening. The second factor is monetary policy operations, which takes care of the quantitative and qualitative measures. And the third one is on the settlement balances, which takes care of the reserve requirements that are taken up. So in this particular respect, we can see that the central bank is very much concerned with maintaining a good and a healthy balance sheet all the time, because it is the central bank whose balance sheet will be reflected in the other operations of the economy. So in order to go for that, the accounting policy of the central bank needs to be well defined. Then only the balance sheet will be in proper place and can meet the requirements of the banking and the other institutions across the country. So this calls for a proper, well-defined accounting policy of the central bank. This is not absolutely similar to the accounting standards of a balance sheet of any commercial company or in the accounting view, but this is something different from the central bank or from the banking mechanism. So in this case, we go for the importance of this accounting policy. Why it is relevant or important? It is important because of the balance sheet health per se, because of the monetary and the fiscal implications. As we know that this comes under the monetary sector, but monetary sector, that is the money market, and the fiscal sector, that is the goods market, they are interrelated. So any kind of policy taken up by the monetary sector will have its effect on the fiscal sector. For example, if there is more and more rise in the ATM outlets in a particular country or in a particular city, then with the rise in the ATM outlets, the flow or the circulation of cash will rise. That is, the circulation of money will rise, and that will create excess demand for goods and services. So inflationary problem will come up if more and more ATM outlets are on the rise in a particular point of time. So as a result of that, fiscal stability will be affected. So any kind of monetary action will have an impact on the fiscal scenario, so thereby accounting policy should be taken care of. And secondly, mostly the central bank follows conservative accounting norms. Conservative in the sense that any kind of changes or modifications in the banking ratios are taken with a serious concern. Either it's a repo rate or a reverse repo rate or cash reserve ratio or any other kind of ratio changes are taken care of the impacts. The impacts are being taken up into consideration, and then the changes are being considered. So this basically refers to the concept of accounting policy now on the concept of income, because income are recognized on an accrual basis. Here income refers to the income of the individual who takes up the loans in the commercial banks. The proper litigations are necessary for the loan to be sanctioned. And asset portfolios are also revalued. This is very important because asset portfolio are exposed to high risk. So they are revalued on prudential norms, where the losses against income and ignoring the unrealized gains. That means every time there is a cost-benefit analysis done on these asset portfolios so that they are well managed and well maintained in any financial institution, which will be reported in the balance sheet of the central bank. So apart from that, we also take care of the foreign currency asset, because central bank also deals with accumulation of foreign exchange reserves. So there is a foreign exchange division in the central bank which takes care of the foreign currency asset. And these are absolutely sensitive to the exchange rate fluctuations. So thereby revaluation, adjustment procedure must be well defined in the policy. Otherwise, the country has to suffer with the surrender of huge foreign exchange reserves. So this is very much important in the accounting policy, how to reduce the risk, how to mitigate the risk, taking care of the foreign currency asset. Apart from that, contingency reserves are also to be maintained, like of natural calamity, like flood, earthquake, or any kind of agricultural distress. For example, there is a huge fallout in the agricultural production. So how all these losses can be managed, at that point of time contingency reserves are needed. Like we have come out from the pandemic, so that was an unexpected event where the central bank also has to be get ready with the funding, particularly for the health infrastructure of the nation. So these are actually the contingency issues which come up, and the central bank balance sheet should also accommodate such kind of reserves. Apart from that, auditing should be done on an annual basis, at least on an annual basis, and they should be done by an external agent. A third party should go for the auditing of the balance sheet for better monitoring, supervision, and a good governance of this particular activity. So now we go for the question which says, mention the accounting policies of the central bank. So in terms of the accounting policies, firstly the recognition of the income, secondly the periodic revaluation of the asset, And thirdly, the contingency. And apart from this, the health of the balance sheet also depends upon the nature of the reserves that are taken up and also from where it is getting accumulated, the origin of all these assets and liabilities. Now we move on to the emerging issues in the context of today's central bank, because this is very much being deep rooted in the central bank policy or the monetary policy of the RBI, and they should be reflected in the balance sheet accordingly. So we go for the emerging issues, and the first emerging issue in the accounting standards is the treatment of hidden reserves in the central bank balance sheet. So when we talk about the hidden reserves, this basically refers to the bad debts which are accumulated in the commercial banks and later on they are designated as non-performing asset. So how that can be mitigated or eroded, and so the banking policy have come up with mergers or acquisitions. So when we talk about the bank mergers, it is seen that most of the banks which are merged together, where one of the bank is a good performer and they merged with the banks which have high NPS, so that there can be some kind of mitigation exercise in terms of hidden reserves. Secondly, income recognition of unrealized gains. This is very much important for quantification of the reserves, because the disclosure should be identified and they should be taken up properly. For example, it has been said that whenever an individual takes a loan, so after the loan is being sanctioned, there should be regular monitoring about the source of income of that individual so that it does not end up in a defaulter. So that is how the banking profitability or the erosion can be actually mitigated. So it is therefore necessary to simultaneously promulgate restrictions on fiscal access so that it goes with the valuation. So when I talk about the fiscal access, it means how can the interest rate, how can the goods market also accompany or accommodate any such kind of changes which occurs in the central bank mechanism. The other emerging issues refers to, is it not easy to discount central bank fears of fiscal pressure of sharing such resources with the government offhand? Most of the times government is in debt. So when the government gets into the debt or suffers into the debt, then most of the times it has to accumulate the reserves, and so they go for the RBI intervention or the central bank intervention. And it is not being given on a very right terms, it is being discounted. So in such case, any kind of fiscal pressure also needs to be accommodated by the central bank. Secondly, it is therefore necessary to simultaneously impose restrictions, but at the same time valuation is important. So there is a need for adopting some international best practices. Because when I talk about international best practices, this is taking care of the standardization or the global accounting standards and how the central bank across the globe takes care of. So there should be integration with the financial institutions which are operating international platforms and how their central bank or balance sheet banking management takes place. This also takes care of the issue of mergers which can come up into a single balance sheet. This is very important because whenever we are talking about the mergers, they are talking about a single balance sheet to accommodate 2 or 3 commercial banks together. Because earlier they were separate entities, but after mergers they can be represented or produced in a single balance sheet, and this is a more streamlining exercise, more rationalization of the norms and other issues. And at the same time, Indian national accounts, where the issue department is classified under public administration, the banking department is taken under financing and insurance. So that is how in the Indian national account standards, that is how the balance sheet of any commercial company is placed. It is said that whenever we talk about the banking, it's under the financing and insurance. So these are the two major dimensions, or these are the two major themes under which we place it, so that both the balance sheets should not be mixed up together. So at the same time, transparency. This calls for a good governance. This calls for a good administrative procedures where the central bank should be given more information regarding the risk management, because this is where the profitability or the survival of the banking system depends. So transparency, accountability, and a proper auditing procedure and an external rating agency all are the need of the hour to ensure better transparency. Apart from this, the fiscal dominance. So when I talk about the fiscal dominance, it means that most of the cases there are fiscal spillover effects on the monetary sector. So that needs to be corrected in the balance sheet. and also quest for limiting the automatic monetization of fiscal deficit, because this has been followed in the earlier budget proposals before 1998, where the deficit financing was one of the ways, but this has increased the level of inflation. So that's why any kind of monetization of fiscal deficit can be a new tool under the Fiscal Responsibility and Budget Management Act. So apart from this, we can also say that in case of the Reserve Bank of India balance sheet, some kind of concern should be taken for needing of the central bank reserves. How can the central bank reserves be built up? How can more strong foundations can come up? What are the reserves that it can accumulate or accommodate? So such kind of brainstorming policies can come up to look after it. And apart from this, there is a need to work on a medium-term rule of apportionment of Reserve Bank surplus between the reserves and the government. This is basically from the statutory point of view, that there should be a good liaison or a communicative channel between the need of the government as well as the Reserve Bank's accumulated reserves, how it can satisfy. So there should be a symbiotic relation between the two. And apart from this, we also take care of the modernization systems. So when the modernization systems takes place, like financial innovations, like building markets, payment systems to be regularized, all these are the innovations in the capital market which are interlinked with the banking system. And there is no gainsaying that Reserve Bank stands at the vanguard of the thrust towards financial development. So any financial development depends upon a good and a healthy balance sheet which takes care of all these fundamentals. This also takes care of a policy concern to a key consideration. This is also important because when I talk about a financial stability, then the policy concern comes in, because this is a policy concern, but what should be taken up as a key element that also needs to be taken care of. And so we can see in terms of our bookish language, as we always say, that Reserve Bank or a central bank is a lender of the last resort, and that is what is reflected in all the functions or emerging issues that are laid down in the balance sheet. So in this particular module, we are taking care of the central banking policy as we are taking up as the policy decision in the functions. Balance sheet of the banks must be quickly maintained, and also it should be healthy in terms of asset and liability management, mainly the risk management. The stylized patterns must be identified and explained in this regard, and the factors on which the balance sheet depends also takes care of. And finally, the emerging issues which are to be taken up in serious concern for a robust and a healthy banking and financial system.